This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices extended gains on Tuesday as a U.S.-imposed deadline loomed for Iran to open the Strait of Hormuz or be taken out, with U.S. President Donald Trump threatening to order attacks on Iranian bridges and power plants. Brent crude futures rose $1.74, or 1.6%, to $111.51 a barrel by 0530 GMT, while U.S. West Texas Intermediate crude futures were up $3.45, or 3.1%, at $115.86. Trump has threatened to rain hell on Tehran if it fails to comply with his deadline of 8 p.m. Eastern Daylight Saving Time Tuesday, 0000 GMT Wednesday, to reopen the strait, through which about a fifth of global oil supply is normally shipped, if a deal is not reached.
U.S. President Donald Trump's move allowing foreign-flagged cargo ships to move fuel and other goods between domestic ports has so far had little impact on American oil supply. Last month, Trump waived Jones Act limitations for 60 days starting March 17, hoping the move would help tame the surge in fuel prices caused by the Iran war by increasing shipments from the U.S. Gulf Coast to other coastal markets in the country. So far, however, shipping data shows the move has not boosted U.S. oil flows between domestic ports. Instead, U.S. fuel exports hit a record high last month, as refiners shipped more fuel from the U.S. Gulf Coast to Asia and Europe, and even reversed traditional flows to export from the U.S. East Coast to Europe.
Moving on to the top news in the energy sector.
Iran and Israel traded attacks on Tuesday as Tehran defiantly refused to reopen the Strait of Hormuz and accept a ceasefire deal on the eve of a deadline set by U.S. President Donald Trump to agree to his demands or get taken out. Iran has rejected a U.S. proposal brokered by Pakistan for an immediate ceasefire and the lifting of its effective blockade of the strait, followed by talks on a broader peace settlement within 15 to 20 days, according to a source aware of the plan. The Iranian response consisted of 10 clauses, including an end to conflicts in the region, a protocol for safe passage through the Strait of Hormuz, lifting of sanctions, and reconstruction, official IRNA news agency reported.
Chinese President Xi Jinping has called for accelerated planning and construction of a new energy system to safeguard the country's energy security, weeks into the Iran war that has triggered global energy shocks. The leader of the world's second-largest economy also emphasized hydropower development and ecological protection, while urging the safe and orderly expansion of nuclear power, according to state broadcaster CCTV on Monday. The party's Central Committee has gained a profound grasp of global energy development trends and made major decisions by advancing the new energy security strategy in depth, he said, referring to the ruling Communist Party's center of authority. Next, we have the top news in metal market. Copper rose on Tuesday with the prospect of stronger demand in China, even as investors remained cautious over the Middle East war as Washington's deadline for Iran to open the Strait of Hormuz loomed. The benchmark 3-month copper on the London Metal Exchange rose 0.52% to $12,424 a metric ton as of 0305 GMT. The most active copper contract on the Shanghai Futures Exchange gained 0.57% to 96,780 yuan, $14,069.11 a ton.
Iron ore futures rose for the first time in 3 sessions on Tuesday as trading resumed in top buyer China after a long holiday weekend, with investors awaiting clarity on the prospects of a resolution to the Iran war. Prices were also underpinned by demand hopes following calls from Beijing to accelerate energy-related construction projects. The most traded May iron ore contract on China's Dalian Commodity Exchange climbed 0.5% to 805 yuan, $117.03, a metric ton by 0243 GMT.
We will now look at the top news in the agricultural sector.
Chicago wheat futures lost more ground on Tuesday, pressured by forecasts of much-needed rains that could improve crop prospects in the drought-stressed U.S. plains. Corn and soybeans edged higher on support from higher crude oil prices. There are some rains forecast for U.S. hard red winter wheat areas, and overall global supplies are adequate for now, said one grains trader in Singapore.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.